Hello, everyone, and thank you for tuning in to the North Main Minute. I'm Joshua Dobie. A question we are receiving with increased regularity right now, and it's coming from all areas of the country. So I'm not speaking to necessarily where we are here in North Carolina, but literally in all aspects, or all areas of the country rather, has to do with the idea or the question of, do you think there's going to be a housing crash, or are we in a housing bubble, or do we think there's going to be a housing recession? No way to answer that with any legitimacy, but there are some things that we're watching that we see where, the benefit of being in business as long as we have, we're able to see the peaks and the valleys of the system and know, generally speaking, how they work. So just some observations that may be helpful for you to keep in mind. One of the things that we have noticed here, and you probably have as well where you live as you're watching this, is that for so many folks who are on the sell side, and we're talking about residential real estate here, but who are on the sell side of the process, it's been a bonanza. Not only have they been in many cases able to get their asking price, but in many, many instances, folks are getting over asking price for the homes that they're selling. Well, I don't want to, put a prick in the balloon here a little bit, but that's not sustainable. It just isn't, meaning that in every market, regardless of where you live, there is a, quote, market value or a market temperament in terms of establishing values for residential real estate. When we go above that unnaturally, sometimes we call it a bidding war or other kinds of things, we are creating an artificial market. Now, some of you optimists out there may say, well, if you do that long enough, then you'll create a new market. Yes, that can theoretically happen. In my experience, that very rarely does. So what usually happens, in my experience, is that as we have these artificial markets, which are above what probably is more of a true market value of residential property, we're going to get some regression to the mean or reversion to the mean. Does that mean that the housing market is going to crash out? Not necessarily. But what it does mean is that there is a greater than average likelihood that there is going to be a decrease in terms of that opportunity to get more than asking price on so many pieces of residential real estate. Second big item to keep in mind, and you probably already are aware of this if you've looked at interest rates at all here over the last several months, we are in a rising interest rate environment. Now, what does that mean? Very bluntly, interest rates are going up. And so that means for folks who have mortgages, for new mortgages, specifically, that they're going to have higher capitalization costs or higher loan costs. Again, bluntly, mortgage payment's going to be bigger. So in that case, you're going to exclude the possibility for certain folks to buy, or you're going to have those buyers be pushed to a smaller purchase, meaning if they could afford a mortgage payment up here for this kind of purchase, and they can only afford this kind of mortgage at a higher interest rate, they're going to make a smaller purchase. So very, very important to keep in mind. It's happened countless times in our country's history. That tends to have a cooling effect. Now, does that mean it's going to be an outright recession crash? Not necessarily so, and as a matter of fact, we don't frankly see those kinds of indicators in the market right now. But it does mean, again, generally speaking, that you're going to have fewer buyers who are able to stretch into some of these inflated prices that I talked about just a few moments ago. So we put those kinds of things in the mix, and it does become a very challenging proposition. Third item that's in the mix there as well, and you may have experienced this, there are a lot of corporations, private equity firms, and other kinds of entities which are buying up a lot of homes as well. Now, is it an epidemic sort of thing? Absolutely not. But it is a relatively new phenomenon in this size and scale that we haven't seen in previous cycles. What does that mean? Don't really know yet, except that what that has done in some markets, in some neighborhoods, it has kept prices pretty high. Now, as long as those folks stay invested and they keep owning that property and maintaining that property, that can be an opportunity for a good thing. If they don't, though, meaning as fast as that money came in, if that money comes out of those neighborhoods, that could create some challenges with regards to comps and in terms of values in those particular neighborhoods and communities. Does that mean that we're going to crash out? Again, no, we're not saying that at all. It's just a cautionary note about some things that are out there to keep in mind, especially if you're looking at making a move or buying a different piece of property. While we're not real estate experts, we're dealing with it all the time here at North Main Financial Group. And if you'd like another set of eyes, perhaps a dispassionate look at where things are for you right now, or if you're making a consideration of a purchase and you'd like for someone to take a look at it with you, we're always happy to sit with you and give you our thoughts. Reach out to us at northmainfinancial.com.